Are you wondering what the best stocks are to invest in for high growth in September 2020? Well, look no further, because today I'm going to be giving you my top 5 best stock picks and even giving a special stock mention later in the video. As always, I'll be explaining the research that I've done behind each stock and explain why I think they're ready for a rapid rise. For a quick recap on last month, 6 of my 7 stock picks are up with an average return of 11.9%. which is absolutely crazy to be almost up 12% in 1 month. The leader of these stock picks for last month was Salesforce, which made a 43% gain in the month. Now, if you did follow the stock market for the month of August, you'd see that it wasn't quite as choppy as it has been previously, but we did see the Tesla rocket absolutely ignite, gaining almost 50% in the month. But enough of talking about the past, let's talk about my stock picks for the month of September. Now, these stocks haven't quite had the same absolute blast off that we've seen in other stocks, but they could be primed for a nice rise, just like Tesla or just like Salesforce. As always, guys, if you've got any questions about investing or how you can get started, be sure to drop a comment down below and I'll answer it whenever I've got time. My first stock pick for high growth in September 2020 is going to be Intel. Now, if you don't know who Intel are, they probably manufactured the processing chip in your laptop or your computer. They supply a huge number of companies like Apple, Dell, Lenovo, and many more. So obviously Intel are pretty big. The stock took quite a tumble in July, which is actually really interesting because the stock actually beat earnings estimates. But the stock then fell around 30% based off like a poor future outlook. Basically, Intel had fallen behind some of their competitors like AMD in terms of manufacturing a new chip, but they have since placed a giant order with their supplier TSMC. So the stock kind of like fell almost 30% for no real reason, seeing as they've since placed that order to catch up with their competitors. The stock has recovered by about 6% since that big drop, but I do expect it to close the rest of that gap and make up that 24% gain. Especially when you consider the performance of the AMD stock and the Nvidia stock, which are both up around 100% since July. Therefore, I think Intel are really primed for a similar big rise. In terms of looking at the Intel stock chart, the stock is kind of holding this bottom trend line that it keeps on bouncing off of. So I do expect it to kind of bounce off this trend line, which it has, and return back to the upper trend. Obviously, I don't really like to focus solely on technical analysis, but Intel does also have the fundamentals to back it as well. Intel sales have climbed about 20% year on year, and it's also holding a very good profit margin with about 21 billion of profit on 72 billion of sales. So therefore we can see that Intel is doing really well and even growing its revenues even during the pandemic. This pandemic has really caused a bit of a boom in the computer industry and the tech industry. As many people are finding themselves without work or working from home, many people are opting to buy a personal computer or a laptop or something like that so that they can work from home or even start freelancing. This is why we've seen quite a big jump in the stock price of AMD and Nvidia and some other tech companies. This has therefore obviously caused a massive jump in computer sales and also quite an increase in these computer processing chips, graphics cards, and everything else computer related. Now, I use the words computer related because really I have no idea what all of the individual components inside a laptop are called. I just know that there's an Intel sticker on pretty much every single laptop and computer in my house. So therefore, not only does Intel have the technical analysis, but it also has the fundamental analysis backing it as well. And that's why it's my first stock pick for September 2020. Now, my second stock pick for the month of September is going to be Bloom Energy. Now, obviously, Bloom Energy aren't quite as big as Intel, so I'll forgive you if you don't know who they are. But basically, Bloom Energy produce renewable energy, specifically fuel cells, and they sell that energy mostly to larger corporations and like office blocks and bits and pieces like that. Now, the whole renewable energy sector has been on a bit of a run lately. Obviously, we've seen Tesla absolutely explode, and so have a lot of the solar panel companies as well. Obviously, Bloom did have quite a good month of the month of August, gaining like 26%, but I do think it's going to continue growing. Vivint Solar and SunPower, some of those solar panel companies, regained back to their previous highs and exploded well past, whereas Bloom Energy has only just about returned to its previous highs. The former CEO of General Electric also invested $1 million into Bloom Energy. Now, he does actually sit on the board of directors, but it wasn't just the maturing of some stock options, it was actually a direct purchase from the market itself. So obviously, if the former CEO of General Electric is willing to put his own money into the stock, it's obviously good news. The most recent earnings report saw a 19.5% increase in sales, although costs did see a similar increase, so obviously the bottom line hasn't really changed too much. Because the bottom line of Bloom Energy isn't quite as good as some of the other companies on this list, I don't think it's as good of an investment, but I do think it's definitely still a buy because I do see further improvements in that stock price, and so does the ex-CEO of General Electric. If you're enjoying the video so far and finding these stock picks useful, be sure to drop a like down below and subscribe to the channel if you haven't already. Now let's get back to the list. Up next on my list is Fastly. Now this one I'm really excited about. Fastly are basically a cloud computing company. They specialise in content delivery, optimization and loading speeds. So basically they go out there and help other websites speed up their website, or help companies speed up their app and make it more optimized, efficient, more secure and faster. Now if we look at the Fastly stock chart, it has been on an absolute tear, but I don't think it's finished yet. Because obviously everyone is now deciding to work from home, the tech industry is really booming and continuing to grow. Therefore, I think Fastly are only going to start getting more and more customers and continue their growth. Second quarter revenues were up 62% on last quarter, and that quarter were up 38% on the quarter before. So we can see that Fastly are growing at an absolute immense speed. Fastly have also been working on increasing their sales price. This has helped improve their margins, and the company has now become profitable instead of loss-making, which is obviously an absolutely great breakthrough. Obviously, if this tech expansion does continue in companies such as Microsoft, Amazon and the likes, then the revenues for quarter 3 and quarter 4 for Fastly are just going to continue growing, and therefore I imagine the stock price is also going to continue rising. Fastly's stock recently had a bit of a pullback from $116 a share down to $74 a share, and has recovered back up to $96 a share. Basically, President Trump announced that he was obviously going to ban TikTok, and TikTok is responsible for about 12% of the revenues of Fastly. But since then, Microsoft have announced that they are looking to purchase TikTok from its Chinese owners. This will obviously mean that the app doesn't get banned, and therefore I do expect Fastly to continue back up to $116 per share and beyond. Fastly already have some really big customers like Pinterest, Stripe, Deliveroo, Airbnb and even more. So obviously they've already got some really good testimonials from big companies, so they can carry on going out there and finding even bigger and even more customers. Therefore, I absolutely think the Fastly stock is a definite buy for the month of September. Stock number 4 on the list is Upwork. Now Upwork are quite similar to Fiverr, but a bit more targeted for the professional. Therefore you can list your freelance accountancy services or marketing services, maybe architecture services or engineering services for sale. Now if we start by looking at the Fiverr stock chart and look at how they've been performing, we can see that they've absolutely exploded by about 400% since the start of the pandemic. Obviously people are now working from home, some people are without work, and therefore they've started to do a bit more freelancing work using websites like Fiverr and Upwork. I think Upwork are really starting to follow the changes in the world. As more and more people are stepping away from this centralised system with apps and services such as Deliveroo, Uber, Airbnb, it's kind of allowing people to take their jobs into their own hands and start freelancing. Upwork gives people the option to take not only jobs like being a taxi driver or an Uber or a fast food delivery driver or a Deliveroo driver, but it allows people to take any job that they work and take it into their own hands and become their own boss. Upwork also gives those people a platform to use. They don't have to go out there and find work by cold calling people that maybe don't want their services. It allows people to list their services on the website and lets people come to them for freelance work. Second quarter revenues for Upwork were up 19.5% to $87.5 million. Now obviously this is really good and shows that revenues are continuing to grow as more and more people decide to work from home or decide to start freelancing. I do think they maybe need to focus a little bit more on marketing and getting their name out there to compete with the likes of Fiverr. Fiverr was really heavily funded by external investment until it listed on the stock exchange in 2019. Upwork, on the other hand, was entirely self-sufficient and self-funded until it listed on the stock exchange in 2018. So obviously it's grown a little bit slower than Fiverr, but revenues aren't actually that far behind. Upwork generated revenues of $87.5 million, whereas Fiverr generated revenues of $107 million. So obviously Fiverr is definitely bigger, but not by a significant portion. But if you were to look at it from a market capitalization standpoint, Upwork has a market cap of $1.8 billion, whereas Fiverr has a market cap of around $4 billion. So obviously you can see that the total value of the company of Upwork is much smaller, even though it has similar revenues. So you could potentially consider Upwork as undervalued at the moment. If you've made it this far into the video, be sure to comment the words undervalued so that I know that you've made it this far into the video. Also, check out some of my other videos if you haven't already. The last stock pick for this month is HP. Now HP are a computer hardware and software manufacturer. They're most well known for their PCs and their printers. Now you should probably know who HP are because HP are pretty big and they've been around for a really long time. They've been around since 1939, so they've probably been around longer than anyone that's watching this video. Although saying that, if you are 82 or older and you are watching my video, well, you rock. Now HP recently took a pretty big tumble, falling from around $23 per share to around $14 per share. Now it has since recovered back up to $19 per share, and I do expect it to continue recovering back up to $23 and beyond. As has been a bit of a recurring theme in this video, because of the growth in the computer sector and in the tech sector, HP have seen some really good sales growth. They actually sold more units this year than they've ever sold ever in their history. HP revenues beat experts' estimates by about $1 billion, which is absolutely huge. They've also been on a really big stock buyback program and plan to buy back more than $14 billion worth of shares. This is actually about half of HP's entire market capitalization. That means the stock price is going to continue increasing as the volume of shares decreases. HP are also continuing to pay dividends. They have about $4.5 billion in cash and made profits of about $3 billion after taxes for last year. So therefore HP are just in a really strong position. They've got a strong income statement, a strong balance sheet, still paying dividends, stock buybacks. They've got everything going for it. In HP's most recent earnings, they also announced that revenues are up 13%. Profits are also up, and they've also managed to clear a large backlog of orders from Q1 and Q2. So that's it for my stock picks for the month of September. But we do have a special stock mention this month, which is Tesla. Now I probably wouldn't invest in Tesla right now if you haven't already. Tesla are already up 47% in the last month alone and up 500% since the start of the pandemic. Tesla has been going absolutely crazy in the last few months, especially last month after announcing its stock split. The stock split will make investing in the stock more accessible. Therefore, I would expect a small rise after the stock split as more and more investors jump on the train. But then I would probably expect a bit of a pullback after the big investors and big institutions start unloading their shares after the stock split and that small increase. I do think the Tesla stock will continue increasing in the future, but I do think it's due for a bit of a pullback. It's increased from around $360 per share all the way up to $2,200 per share and above without a single pullback. Therefore, I do think a bit of a pullback is due, and this stock split might be the cause of that pullback. This could be a great time to get in on Tesla, ready for the next rise. Now, I do think Tesla are an absolutely brilliant company that are revolutionizing the game. But if you look at it in terms of market capitalization, Volkswagen have a market cap of $73 billion, and obviously Volkswagen own a huge amount of brands. They own Audi, Porsche, Lamborghini, Bugatti, Seat, loads more as well. Whereas Tesla on its own has a market capitalization of around 400 billion. So Tesla is 5 times the size of the entire Volkswagen group. As always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding the notification bell. That way you'll be alerted when I upload a new video. Cheers!